How's it going, everybody? So in this video, I'm going to talk about how to buy a house. It doesn't matter if you have low income, doesn't matter actually what your income is. Anyone, if they plan properly, can afford to buy a house. So I'm going to go over with you how you can buy a house in a very short period of time. So the number one thing that I actually want to recommend, and this is a little tip that I've been doing basically for the last 9 years, is what a lot of people do, and this really is not fair at all. It's not fair, but what a lot of people do is they will go to a bank and they trust the bank and they're hoping that the bank will make some informed decisions for them. So what generally happens is you go to a bank and you see how much money you can get approved for, and they'll do some little calculations, some formulas, and they'll give you a number. Now, what most people will do is they will pick close to that number. For example, let's say you're approved for a $400,000 house. Most people will try to buy a $380,000, $390,000, $400,000 house. The issue with that is that if you do that, that puts you in an extremely bad position. The reason for this is generally that means you're only putting a 5 to 10% down payment on your mortgage. What I like to do is minimum. When I first started off, and this is kind of what you can do, and I'll just use a calculator to kind of show you. When I first bought a house with my brother, we kind of split the expenses. I was 19 years old. We did a 20% down payment. Now, that was the first house I ever bought. The second house I bought, I'm just doing a quick calculation here. The second house I bought, I did a 38% down payment. This last house that I recently bought, how much did I put? Let's have a look here. I put a 60% down payment. Now, the reason why you want to do these high down payments is because it doesn't really affect your monthly expenses. For example, my mortgage a couple of years ago was only $500. So me and the wife would split $500, so $250 a month each. That's it. I know a couple of people right now that are paying for apartments that pay $1,800 a month or $1,200 a month with a roommate. So it's definitely a little tricky, but again, I recommend, even if you can afford to buy a house, make sure you don't fall into the trap of putting a 5 or 10% down payment. If this is your first house, you're super excited, minimum 20% down payment. Trust me, if you can't afford that, then hold off just a little bit longer. Again, what a lot of people do is they get absolutely screwed on mortgages, and it can affect their whole financial life. And the thing is, what happens when people get into a financial difficulty with a mortgage, what they will do is they will try to sell their house as fast as possible. And generally what happens is they don't get market value. They actually get $10,000 or $20,000 below market value, and then they lose a ton of money on top of that. So it's really, really not good. Plus the legal fees, the mortgage fees, you can really lose a ton of money by doing this. So again, my biggest tip is start off small, or start off a little bit bigger. Start off with a smaller house, but a bigger down payment, 20% minimum. The key for also buying a house is not how much money you make. This is a huge mistake that people make. It's your savings rate. You can make any amount of money that you want. It's how much you can save per month. A general good, like really good savings rate is anything above 30%. 20% is still pretty good. Financial advisors recommend a 15% minimum savings rate. So if you're 20, you're doing a lot better than like 90% of people. So that's just what I recommend doing. Bump up your savings rate. Don't fall into the trap of getting high mortgages. So end of video. Thank you so much for watching. Please subscribe to my channel if you haven't already. Please follow me on Instagram, DylanBerg999. Thank you.